All right, it's 11:30 here in Melbourne, and I think we will get started. So thank you everyone who is tuning in today. I'm Henrik Anderson. As some of you know, I'm the CIO of Apollo Capital, and Apollo Capital is a crypto fund based here in Melbourne, Australia. We call ourselves the premier crypto fund. We were one of the first regulated crypto funds in Australia. And we've been up and running since February of this year. At the end of this webinar, we will do a little Q&A. So if you have any questions, you can enter your questions in the little chat box next to this video. And I hope you ask a lot of questions. It's always fun to try to answer your questions. Since it's the last webinar of the year, I thought we could do a little bit of a look back at 2018, very dramatic year for crypto assets in general, and so much happened during the year. So I think that could be worth of time. Some of the things you will hear me talk about, you probably heard me say before, but some of you are new as well. So I hope you don't mind that. I'll also try to give a little bit of an outlook how we see 2019 and beyond playing out, um, both for the markets, but also for the technology and for our fund. And as I said, after that we will go to a little Q&A. So if you have any questions, you can just put them in the chat box. So I think there were a number of key events in 2018. Of course, we didn't expect the prices to decline as much as they did. We entered the year with a market that was overhyped, mainly I would say in the ICO market, and I think we were mainly correct in early in the year saying that the ICO market was overhyped. We did identify that, and we stayed out of many ICOs that were pitched to our fund in the first half of 2018 for this reason. I think we have a much lower exposure to ICOs than many other funds. So let's talk about prices. Bitcoin is today down, I just checked this morning, 82% from all-time high. I think it was down to maybe 84, 85% down at its low a few weeks ago at around 3,000. Now it's back to almost 3,600 this morning. Many other assets are down a lot more than that. Many other assets are down 90%, and ICOs are down between 95 and 99%. And I think it's worth emphasizing that there is a huge difference in being down from all-time high 80% versus 90%. If you're down 80% and you go down another 50%, then you will be down 90%. So even though 80 or 90% might sound similar, it's actually a very, very big difference. And our philosophy from the beginning in starting this fund was to not diversify too much. And I think that has proven right. There is a limited number of assets in this space that we think makes sense, that have merit, and that's where we are focusing our efforts, both when it comes to which sectors to invest in and what are the particular assets. So that's that about prices. Everyone can see the prices on CoinMarketCap and other sites. And we don't know where they will go, but we think this market will grow a lot the coming years, and we want to build that diversified exposure. I think if you look fundamentally about the news in 2018, I think there are a few items I would like to highlight. One is, of course, the SEC. Everyone is looking at regulation very closely in this space. The SEC came out with a statement from William Hinman at Yahoo Finance Summit, and then that's what it was about 6 months ago now. SEC in that speech said that Bitcoin and Ethereum are not securities. That means Bitcoin and Ethereum can be traded freely, and securities law do not apply to Bitcoin and Ethereum. And this is very important. The other point the commissioner made was that Bitcoin and Ethereum are not securities, and one of the key reasons for that is that they are sufficiently decentralized. So decentralization is very important for any asset in this space not to be regarded as security. We have seen more and more regulation around ICOs. I think many of the ICOs are securities, and we saw already 9 months ago that most of the ICOs that cross our desks are applying with the security laws, sometimes under an exemption from SEC registration laws, Regulation D, only open to accredited investors, institutional investors like Apollo Capital. And that has led to a decline in the ICO market. It's now trending at between $100 and $200 million per month. In the beginning of the year, ICOs raised $1 billion per month. That has hurt the price of Ethereum. Ethereum was mainly used to raise money in ICOs. So that market, a lot of the froth in that market has gone away now, we believe. And that's why you have seen Ethereum trade at under $100 recently. We believe that's because of the ICO market coming down substantially, 90% or so plus from the big peak levels late last year. We think there are potentially other use cases for Ethereum that we are excited about. They will take time to play out, but there will be other use cases than ICOs for something like Ethereum. So I think that has really been key with regards to regulation. Everyone is looking at what the SEC is doing, and we have gotten some clarity from them during the year. Another trend I would say is that engineer and tech people are still leaving companies like Google to work with crypto assets, with blockchains in the crypto asset space. We see people leaving these kind of companies in Silicon Valley and otherwise to work in this space, to build out the infrastructure in this space. And I think this is a really positive sign for the future of crypto assets. With the smartest mind working in this space, we know that some of the hard problems will likely be solved. Things like privacy, things like scaling, and people are also building these new decentralized applications on top of platforms like Ethereum and other platforms. And on top of Bitcoin as well. People sometimes believe that most of the development is taking place on Ethereum. I don't think that's necessarily true. It's just that the development on Bitcoin is much more focused, versus it's more experimental on Ethereum. So there is as much development going on Bitcoin as on Ethereum. I think that's sometimes missed. So we covered prices, we covered regulation, we covered smart engineers still leaving to work in this space. I think one other important development this year, and this happened just a month or two ago, was that the big US university endowments for the first time entered this market. So we got investments from the likes of Yale, Harvard, MIT, Stanford, and others investing in crypto asset funds. So they see the potential in this market. They want to have some exposure, because this might be the future, and they want that upside. By investing a small amount of your assets under management, you can get exposure to something that has been growing really fast for the past 10 years. It's probably the best performing asset class during the past 10 years. And some of these sophisticated investors we talk to, they see the recent declines as a buying opportunity because they are long term, and they know this will not go away. So with US endowments, and these are some of the most sophisticated investors in the world. I think the Yale endowments have 40 billion US dollar under investments. When they enter the market, there's a signal to other institutional investors and to investors all around the world. And we see that in Australia as well, with institutional investors. And I think that has been great during the year. We have done a lot of educational events, and we see the interest in this space. Despite what the prices are doing, people are interested to learn about crypto assets and what blockchain means for the future of finance. And that has been really, really great going around Australia this year to speak to institutional investors or high net worth investors who are interested in this space, and is looking at the space and finding ways to get exposure to this potential future infrastructure of the internet. Another high barrier to entry in crypto asset has been custody. And I think we have seen a number of important announcements in the custody space during 2018. We have seen efforts from the likes of New York Stock Exchange, Nomura, Goldman Sachs, some of the other custody providers in the legacy finance space is entering the space as well. Many of those solutions haven't launched yet, but they're on the way. The infrastructure is being built out, and that's key. And I think just looking and thinking about the last 18 months, I think another point is that most people have heard of crypto assets. That was probably not the case 18 months ago, and I think that's just great. And I think Bitcoin is no longer just something niche. It's in the public domain now, and we have mainstream articles about this space every day now. And it's really hard to keep up with the space because the development is happening so fast. So I think that's my summary of 2018 in a few minutes. Those are really some key events. Prices are down a lot, but fundamentally, the news has actually been quite encouraging, both from the regulatory standpoint and the infrastructure standpoint. And then let's move on to the outlook for this space, this asset class, as we like to think about it. One thing we talked about a lot in 2018 has been institutions entering the space. People are probably getting tired of hearing about it, but we believe actually this is the case. Institutional investors are slower entering the space. In January of this year, I believe Bakkt will launch. That's is a company started by ICE, which is the biggest exchange operator in the world. ICE owns New York Stock Exchange and stock exchanges across Asia and Europe. I think the value of the company is $48 billion. They have been looking at this space since 2014, and they decided to launch an institutional offering in January of next year. And it will be coupled with some consumer products as well. Remember, the investors behind Bakkt are not only New York Stock Exchange and ICE, it's Microsoft, it's Starbucks, and I think BCG as well. So you will be able to buy coffee with Bitcoin at Starbucks in the very short term. But I think more importantly, they will most likely launch an institutional product in January of 2019. It will be a one-day um, settled, physical settled future on Bitcoin. And they will use the whole infrastructure with settlement and clearing and warehousing that New York Stock Exchange has built up over the years. This is one of the most trusted names on Wall Street. Um, so institutional investors being concerned about custody in this space know they have a player that they trust today, where they have the lines to today, where they can trade Bitcoin and they can let ICE warehouse their physical Bitcoin. Uh, and that's really important. I'm not saying that the price of Bitcoin and crypto assets will go skyrocket in January. Um, I think it will be gradual, but this is an essential piece of infrastructure that we had not had before. For the first time, you have a federally in the U.S. regulated entity that is offering these kind of services. I mean, we have had services like Coinbase before in the US, but they are regulated on a state by state basis. Now you have federally regulated Bitcoin future that you will have, and I think that's great. It brings this space to a whole new level. You will have a price that you can trust, and that will lead to other things as well. I think having a price on an exchange with the infrastructure and compliance and systems that monitor market manipulation that is used for all kind of assets today, commodities, FX, equities, other instruments. It puts Bitcoin at the same level. And this means that you will have, I believe, one day other instruments that are even more mainstream. One day you will have an ETF, I believe. Um, but before you can have an ETF, you need a price that you can trust. And to have a price that you can trust, you need to have the infrastructure that covers market manipulation that is trusted by the world's biggest organizations today. So that's Bakkt. Maybe not the short-term impact, but I think it will be gradual, and it's very positive. Um, I think as equity markets starts to falter, I think most equity indices in 2018 is done for the year now. The volatility is up a lot. Bitcoin is actually pretty strong the last few days, while equity market has been very volatile. I think that just shows that this is an uncorrelated assets. The correlation studies we have done has shown the same thing as well, and I think this will continue to be the case. Interest rates are going up. The bond market is not very attractive. The equity market has been going up for 10 years straight. There's a big trade war. The geopolitical situation in the world is very uncertain. Um, and this just, I think, makes crypto an even more interesting asset class. Um, when it comes to Bitcoin, I think there is a use case in being a digital gold. The gold market is between $8 and $10 trillion. Bitcoin now is less of 1% of gold. I believe the probability that Bitcoin one day will overtake gold as a store of value is more than 1%. That's why I'm bullish on Bitcoin. And that's why we are buying Bitcoin for the fund. We think these are attractive prices. Other assets, we still need to see more use cases. I think in the coming years, I don't know if it will be in 2019 or beyond, we will see a breakthrough kind of an DApp, a decentralized application on top of something like Ethereum or another platform going viral. It's very hard to pinpoint where that will be, if it will be in gaming, in gambling, or something else. But we have some of the smartest people working in that field. It could be in some kind of other digital ownership. It can be in the tokenization of real world assets, or it can be related to smart contracts and maybe in open finance, which is an area we talked about a lot in 2018. But we believe that breakthrough will happen, and that will fuel more assets than just Bitcoin. And maybe that can lead into the tech outlook. I think that's at least as exciting as what's happening more on the institutional side. So in the actual tech outlook, I think there are some really interesting developments. Um, One is in privacy coins. So privacy is an interesting niche within the cryptocurrency area. Um, Dash was one of the early one. They used the mixing technology. Monero, many people are familiar with. They use ring signatures. Zcash was a breakthrough in creating something where both the outputs and the inputs and the balances are completely shielded. Um, Zcash recently got listed on Coinbase. It's also a holding in our portfolio. I think we will see if we have Bitcoin and then something like Monero and Zcash being more privacy oriented. Think we will see the next, maybe the third iteration of a privacy protocol coming to life in early 2019, and that's called Mimblewimble. We'll see a couple of implementation of Mimblewimble, and that will be super exciting to follow. Um, um, there's one called Green that looks quite interesting that we are keeping a close eye to. So things are happening in this space. Another is in Lightning Network. I actually just listened to a podcast with the CTO of Lightning Labs. If you follow him on Twitter, his handle is roast beef. And he talked about all the developments happening on Lightning Network. We have seen Lightning Network go exponential in terms of funds committed to channels the last few weeks or the last few months, I should say. Lightning Network again is a second layer on top of Bitcoin, which will enable very fast transactions, very small and cheap transactions. And it's pretty exciting because it enables potentially scaling of Bitcoin to millions of transactions per second. It's really hard to use today. It's no real graphic user interface. You have to run a full Bitcoin node to connect to your Lightning channel. And this is going to have change in 2019. So you will have light wallets like you have SPV wallets for Bitcoin. You will have similar light wallets for Lightning Network. So you don't actually have to run a full Bitcoin node to use Lightning Network. That will enable us to use Lightning Networks on mobile. And they are going to ship an iOS and later an Android app for Lightning. So that's really exciting to follow, something we follow closely. Another one I think I like to highlight is decentralized exchanges. I think we will see a lot of development happening in this space. And why is DEXs important and interesting? DEXs is important because DEXs, we have seen a lot of hacks of some of the biggest crypto exchanges in the world, and that's why you should never leave crypto assets on an exchange, because you don't want to give up custody of your private keys. And these exchanges can and they have been hacked in the past. I think this year we had CoinShake in Japan getting hacked in the beginning of the year. I believe it was around $500 million. In the past, we have seen exchanges like Bitfinex, Mt. Gox, the biggest exchange at the time. In 2013, early 14, they shut down because of them losing funds. With DEXs, you no longer will have to give up custody of your crypto assets. So you can keep control of your private keys and still trade with the rest of the world. So this is a really interesting development, and a lot of people and exchanges working on that. Coinbase earlier this year acquired a DEX. 0x is a protocol for decentralized exchange on top of Ethereum. Um, Binance, the biggest crypto exchange today, is working on a DEX. I think they will launch a beta version of that DEX in maybe already in January of 2019. So you have the biggest exchange in the world launching a DEX. That means that you're moving from a model where you trust a centralized party to where exchange is just based on freely available open source software. That's a huge breakthrough. So far, it's been too slow. People have been able to front run, and it hasn't been fully decentralized. But with all these efforts taking place in the space, I'm confident the engineers will solve this problem, and this is a fundamental breakthrough. We can trade with the rest of the world without trusting a third party using blockchain technology itself. So that's another space we are following closely. That ties into a bigger area called open financial system, DeFi. You might have heard that concept. We are trying to build new financial infrastructure that is decentralized, that is open, permissionless, trustless, censorship resistant, all these good qualities with blockchains. Crypto lending is one of them. You can borrow and lend assets trustlessly just using smart contracts. Stable coins is part of that. Stable cryptocurrencies, DEXs is part of that. Financial derivatives are part of that. These are all services that can be built with smart contracts, not based on financial institutions, all based on freely available software. So if I land on these platforms that are built on top of Ethereum, I borrow on this with these smart contracts, I don't have to trust the financial institution. There is no financial institutions behind it. It's just based on code, and that's all that is needed. Then we have another number of projects that have raised a lot of money and that will launch next year. And we are pretty excited to see the adoption and the launch of these projects. One of them is Definity that I mentioned a few times during the year. We invested in that project. We think they're optimized quite well on being decentralized and being scalable. I expect them to launch during the first year of 2019. That'll be interesting to follow. And there are a few other projects as well that we invested in that will launch in 2019. Trust Token is another one that are tokenizing real world assets. I expect them to launch maybe mid next year. They have their first product out already through USD, which is a stable coin pegged to the US dollar. And there are a few others like that we follow very closely. But I think Bitcoin is becoming more and more a digital gold. And more people realize that it actually has better properties than gold. And as I said today, Bitcoin only has 1% of the value of gold, which we think makes it quite attractive. And to sum things up before we go into Q&A, Bitcoin has declined 80+% 4 or 5 times in the past. We didn't expect it to decline this much during 2018, but it did decline 85%. It has bounced back every time. This is not just one bubble that collapsed and never come back. It has been going through these kind of hype cycles many times before. We don't believe this is any different. And every time in the past this has happened, this has been good buying opportunities. And that's what we are seeing now in some of these assets. We think there's still big downside in many assets out there. So you really have to know what you're buying, and you have to be long term. You have to be prepared to average down if prices go down further. But long term, this trend is going to continue. the world is becoming more and more decentralized, and that's the infrastructure that is being built out right now. So we remain laser focused on store of value, on supporting this build out of the open financial system and of tokenization of real world assets, the digitalization of any asset in the world. That's a huge opportunity for blockchain technology. And encouraging, we are seeing more and more interest from institutional investors. And in 2019, we hope to speak to many more institutions in Australia. Um, and we have already spoken to a few institutions in Australia, and we see interest from them. And I think they see the potential in this space. So that's very encouraging. And I think I'll land it there. And this is the last webinar of the year, and hopefully you have some questions. So I'm going to go to the website and see if you have any questions for me there. Just taking some time to connect here. All right, so I see you have a number of questions. And I think one of them is from Adrian. So we got one question saying that crypto markets are waiting for this institutional money to flow, and the final decision by the SEC will come on 1x, Solid X ETF application. If this application were to get rejected, would they be able to reapply again? If not, what will be the next catalyst for institutional funds such as endowments and pensions to invest into this alternative asset class? This is a great question. I think actually right now, I think the expectation is that the FANEC Solid X ETF will not be approved by the ETF, by the SEC. Remember, they cannot delay the decision beyond end of February. And the reason why I say that is that the chairman of SEC, Clayton, he recently made a comment saying that the underlying market needs to be more regulated. He hinted that the market is not ready yet. That's why I highlighted earlier that I think Bakkt is so important. But that will create a regulated market for Bitcoin. So I don't think the market expect this now. I don't think the market expect this ETF to get through. I was more bullish on this ETF earlier in the year, but with the recent comment from the chairman of SEC, I'm a bit more bearish on an approval of an ETF already in February. If they get rejected, they might try again at a later date. But I don't think the market expect that now. Not with the prices where they are. So it will be gradual. I think the first step will be Bakkt to get a price that is free from manipulation. And if those kind of services get enough volume, then you really have a price, an underlying market that is mainly trading on regulated exchanges. And that will enable an ETF. The VanEck Solid X ETF might happen, and I think that will be a surprise, and I think that will be a catalyst for the market on the upside. But with the market not expecting it to go through, I don't think there is big downside in the market. It's not getting approved. So I wouldn't have my hopes too high for that. So again, I think it will be gradual. I think it will be services like the future. I think CBOE is trying to list an Ethereum future. That's another development. I think we will have Fidelity launching a platform in Q1 of next year. I don't think I mentioned that earlier. We'll have Nomura launching a custody service in April, May. These will all be puzzle pieces in the infrastructure of crypto assets. And they will all lead to increased adoption. and it will be gradual. And the decision process among big institutional investors is long, and it takes time. And crypto assets will not live and die by decision by SEC of a single ETF. Remember, this is ETF has a minimum investment amount of 200,000 US. It's not a retail ETF. So it's unsure what the impact of this ETF would be, even if it would be approved. All right, let's see if you have any other questions. Excited newcomer, what is your view with respect to two major risks with respect to specific projects? One is regulatory risk given the canning of bases and the reasons for the drastic action. And two is the result of the price action where there is no fear that some projects might not be running out of money. This being particularly frustrating given not much transparency around, reliable transparency maybe. Your opinions would be great to hear. Yeah, so Basis I think was a surprise. Basis again was a stablecoin project with good backers such as Lightspeed and Bain. They raised $133 million earlier in the year to build this algorithmic central bank called Basis. It was a 3-token system. I think just last week they announced that they're giving back the raised funds to their investors. In this market, I think the investors were pretty happy about that. They're getting their investment back, and if they would have launched, maybe it would have traded at a discount like many ICOs are doing with respect to the price compared to the ICO price. And the reason they gave is that they had a 3-token system again, Basis as a stable coin. That's not a security, but they had 2 other tokens. They called it shares and bonds. And their legal advice was that shares and bonds will be regarded as securities by the SEC. And they felt that with shares and bonds being securities, they wouldn't have enough liquidity in the system to back Basis, which is the stablecoin. I think the implications for this are a number of things. Firstly, they raised money early in the year, meaning they didn't hear the Bill Hinman's speech about the definition of securities and what the SEC thinks is important. Had they raised money later, they probably had structured the project in a different way. The focus is on decentralization. They probably were too centralized. I think it probably wasn't wise to call the second and third token shares and bonds. That sounds like securities. If you try not to be a security, you probably shouldn't name it shares. They had a system where they issued more shares and bonds and could buy them back. This sounds like some kind of investment scheme or security. So I don't think they could have avoided being securities with the current thinking of SEC. It also probably implies that some projects will probably avoid being based in the US or target US investors because then you become under the jurisdiction of SEC. I don't think it changes anything with regards to the SEC's views of ICO or anything like that. It doesn't update or thinking about ICOs. But given the hype around Basis, I think it came as a surprise to the market. So it will be probably good for projects in other regions. We probably will see more project being based out of Switzerland, Singapore, Hong Kong, where they have some of them have clear regulation around what is a utility token, what is a security token. That would be my view. Some project raised money in Ether. They didn't hedge. and now they lost a lot of money because the price of ETH is down a lot. So treasury management is very, very important, and that's something we're happy to consult with projects on, how to manage your treasury. We want to help the projects we invest in to help them succeed, um, and that is of course very, very important. And this market probably highlights that as well. We have got one more questions, and if you have any more questions, please put them there. Otherwise, I think this is the last question. Is Timid Traveler, is now a good time to invest in crypto? Is ETH dead? I think this question is too broad. I cannot say it's a good to invest in crypto. You really need to be laser focused on what you invest in, how you invest, and know what assets you invest in. So if you buy Danta coin, I don't think that's a good investment. Um, but I think there is value uh, in some of these assets. Remember that 2,000 assets are traded daily. Um, so I think the market as a whole has a potentially very big upside. The total market cap is currently $120 billion. To really become a new asset class, it needs to be in trillions of dollars. And if we are reshaping the infrastructure of the internet, that's a multi-trillion dollar project. So I think the upside is huge, but you shouldn't just invest in crypto. That is too broad a question, and most of these assets have very little merit actually. Is ETH dead? No, I don't think ETH is dead. We said earlier in the year in the investment team here internally that we thought in a worst case scenario ETH will go to high double digits. If the ICO boom completely dies down, ETH was trading at $100, say in April, May of 2017, before the real hype took off. It reached high 70s to low 80s, I think, in US dollar terms a few weeks ago. It's now around 100 again. I don't think ETH is dead. There are actually a lot of projects building on Ethereum. And we believe there will be use cases on Ethereum that is not tied to ICOs. And I have mentioned some of those today. Some of them have to do with open financial system. So